DRC Systems India Limited is this 252 crore company, software company, so a small cap company, which has seen some very impressive growth in its financials. For example, in the last 3 years, the compounded sales growth has been mentioned at 50%. 50% compounded sales growth. Compounded profit growth has been mentioned at 178%. Very impressive numbers. Okay. Today, we're going to analyze the company's financials, what it actually does. Okay. So 252 crore company, current price of one share 17.5 rupees. Book value, that is assets minus liabilities, per share is only 5.65 rupees, common in software stocks. The price to earnings ratio is 15.2. Return equity, return capital employed. We will take a look, but pretty high numbers. Now, the financials of the company. So first we have the revenue. All these numbers are in lakhs of rupees. Okay, lakhs of rupees. So in fiscal year 2022, 1,950 lakh rupees, 19.5 crores, increased to 25.6 crores next year, then 47.68 crores in fiscal year 2024, finally bringing us to 65.37 crores. 65.37 crores for fiscal year 2025. You can see nice growth. 37% growth for fiscal year 2025. Then let us come to the gross profit. Okay, gross profits, gross profit margins. So, gross profits increased from 4.02 crores in fiscal year 2022 with a 20.6% gross profit margin. Okay, that increased all the way 25 crores of gross profit in fiscal year 2025 with a 39.4% gross profit margin. The profits have also increased a lot. In fact, they increased by 46.5%. This is gross, not EBITDA. This is gross profit. And the margins have also increased. Let's go to the EBITDA. Okay, earnings before interest, taxes, depreciation, and amortization. So, EBITDA increased from 2.6 crores in fiscal year 2022, 13.3% EBITDA margin, increased drastically to now 21.2 crores of EBITDA for fiscal year 25 with 32.4% EBITDA margins. So, high EBITDA margins right now, last 3 years, did reach a high of 39% in 2023, but after that, it has stabilized, at least stabilized to the 30s. And profit before tax has also increased a lot. It was 1.2 crores, okay, 120 lakhs, 1.2 CR in fiscal year 22, increased to 16.86 CR in fiscal year 2025. A massive increase, massive, like 10x, right? Yeah, 10x in like few years, 4 years, insane. Then finally, the profit after tax or the net profit margin. We have profit after tax increasing from 70.3 lakh rupees, 70.3 lakh rupees, PAT margin of 3.5 percentage only, increasing all the way to 15.07 crores in just 3 years. 70 lakhs to 15.07, 22% net profit margin, which is a pretty good net profit margin. So these were the financials. There is one more financial, that is cash flow, we will go to. But now, what does the company actually provide? Now, these are the company's services, and the thing is, I don't understand them. So I don't understand what they actually do. So the main point I can take is the diversity of the services and the different things it provides and different sectors it caters to. For example, in their services comes web development, websites, mobile application development, okay, digital learning, e-learning, helping e-commerce, digital commerce. So DRC systems, they don't have their own e-learning platform, they don't have their own e-commerce company, but they help e-commerce companies, they help e-learning companies or online education companies in like software or whatever things they help in. They help in mobile application development, so catering to the mobile software, mobile apps, they cater to that. Second, content management. That's another thing. They can cater to content companies or content creators. They can help in that. or companies creating content for the employees and all of that. Then quality assurance engineering and testing. Quality assurance, checking the quality of a software. Is a software application, software program working as it is going to, as it is, checking if a software is working accordingly. Does it have any bugs and all of that? So testing that. So this is a wide variety of things. Quality assurance, engineering, and testing caters to a wide variety of software companies because they all want to check their software if it's working or not. Then comes cloud, cloud migration, cloud infrastructure management, cloud strategy and consultant. And as you can see, in the past decade, companies are moving from on-site servers, that servers storing their own information, to move into the cloud. Basically, they have off-site servers. So servers owned by companies like Amazon Web Services, Google servers, Google Cloud, and they provide storage, all these services over the internet. That is the cloud. So helping companies migrate from the traditional on-site cloud model, on-site servers to the cloud. Then cloud infrastructure management and consulting companies on the cloud strategy. Okay, fine. Then look at this. Enterprise Resource Planning ERP is a software catered to businesses. So businesses use their this software to manage their internal resources like inventory management, all of that. So they have services which caters to enterprises in this. Then consulting services, then digital process automation, automating some of the processes in a business, some of the things that people do inside a business, they can help automating that. And then product and platform engineering. So wide variety of things. The main point is they're catering to a wide variety of things. And then comes this blockchain powered platforms, okay, AI, machine learning, advanced data analytics, all right, custom solutions for companies, personalized solutions, and what else? What is, yeah, chatbots and virtual assistants. So a lot of things, a lot of services catering to different segments is what I wanted to show. It could be mobile, it could be enterprises, it could be cloud, which caters to even more and more businesses. So that is the main point. Then comes the verticals. What businesses can they cater to? One, retail companies in the form of e-commerce that we saw earlier, education, e-learning offers ultimate learning experience through domain expertise and modern solutions. Okay. Manufacturing, streamlining. Streamlining means making the process simpler, simpler, faster. Streamlining the dynamic supply chain to move the world. Supply chain of companies can be made simpler. They can help in that. Then BFSI, banking, financial services and insurance sector stands for BFSI. They can cater to that. Then the public sector, they can cater to governments, PSUs, government companies, reshaping government administration with digital solutions. So digitizing the government services themselves. So governments can be their clients, and healthcare. Healthcare companies will need automation also. And see, patient data management. They can help with healthcare companies too. So you can see a wide variety of businesses can be catered to, and a wide variety of needs of the businesses can be catered to. So maybe clients can see, and potential clients can come and see the company is providing so many different services. Maybe they can provide them something too. So maybe more clients. Then few customers and partnerships. These are some of the partnerships that they have. A partnership basically means sometimes they use the technology of other companies. Yeah, for example, Salesforce. Many companies use Salesforce proprietary tech. And what do they do? They help other companies use Salesforce better. There are companies that cater to helping other companies use Salesforce better. They can be termed as Salesforce limited partners in a sense. So Ahmedabad University, okay, IIMA, all right, National Skill Development Corporation, Indian Institute of Management, Bangalore, IIMB. This is Ahmedabad, I believe. Baku Consulting, GNA, Wipro Foundation. Government clients are there. Institutions, IIMs are there, like Ahmedabad University. So, and finally, very interesting clients. Very interesting clients. In the consolidated financial information, we have more financial information. Take a look at this. Return on equity for fiscal year 25, 26%, fiscal year 24, 25.98%. So high return on equity, that is really nice. Then return on capital employed, 25.6% and 25%, so high return on capital employed too. Yes, that's good. That's good thing. Then debt service coverage ratio and debt to equity ratio. Notice they're not there. It's zero. How's debt to equity zero? Well, because the main thing, and I think the only reason it could be, is when the debt is zero. So the company's borrowings are zero. They have got almost zero debt, almost zero loans. Taken okay, long term, short term loans, almost zero of them. So very good balance sheet. And finally, one last thing is going to show, yes, the cash flows. So let's move to the company's cash flows. Here are the cash flows from operating activities in crores. So cash from operating activity in 2022 minus 1 crores. That's not a good thing. Okay. Next year, 3 crores. Then 28 crores of operating cash flow. Then 33 crores of operating cash flow. So you can see a lot of cash flows. So cash flow positive company, decent growth over the last few years, nice growth actually. And one last thing to mention is that a big portion of the company's revenues comes from UAE, the UAE region. So UAE, I think, is the biggest. Then comes India, then comes other countries. So when trying to see how fast it will grow in the future, UAE is a geography that needs to be paid attention to. Then comes India, then US, and all of that. That is it. That is DRC Systems. Very, very small company. Let us see if they can, let's say, transition to be a mid-cap company, maybe in terms of revenue, reach 150 CR some many years later. Let us see if they can achieve that.